Hello everyone, welcome back to the channel. This is Robinhood Portfolio episode 13, quarterly earnings. The second quarterly earnings have came to a close, and we are going to start seeing some earnings reports coming out for a lot of these companies. So again, it's earnings season, guys. Earnings are coming up, and a lot of these stocks, if they have a good earnings report, if the metrics looks good and the guidance looks good, then they're going to jump up. And, I'm the one to say that I don't play earnings reports, but, I don't see any reason to sell a stock just based off a quarterly earnings report, because we don't know what will happen with the stock. It's really a gamble. You can either hold on to the stock or choose to sell it before quarterly earnings. I know a lot of people like to sell off before the earnings report comes out, but I'm going to stay put. I'm going to hold on to all my stocks. Right now, the portfolio is sitting on -$3 for today. Today was a shortened day. Tomorrow is the 4th of July. The markets will be closed. And for the after hours, it just changed. I'm now minus 25 cents for the after hours. So, that has really been really just an up and down week. I really don't care how the portfolio it goes up and down with all this volatility, because I try to look at I look forward to investing for dividends and just getting free money and trying to put my money into these solid dividend stocks. I do like growth stocks, but I also like dividend stocks, and I'm trying to find the right balance of growth and dividends so I can increase my cash flow. So we're going to jump right into portfolio, guys. We're not going to just wait around. As you can see, I have increased my Walmart shares a little bit. I think Walmart tanked just yesterday. I think they got down to a great buying opportunity around that $82 mark. I think Walmart is a great buy at $82. So I added 2 more shares to them. I think they do have a quarterly earnings report coming out. It is earnings season. Well, theirs is next month, but this stock really has been taking a beating. It got up all the way to $108, and now it trended all the way back down to around that $82 level. So we're seeing great support levels around this little $82, $83 mark, and I think that's where if I were anyone else, I would buy that $82 buy at the $82 mark. I'm not saying, hey, go do it tomorrow, but I'm just saying take a good hard look. If you're interested in a discretionary stock, if you want a retail stock, take a good look at Walmart, because they are on sale. So I added to my Walmart shares. There hasn't really been much changes to my portfolio. Starbucks is right back into my portfolio again. I think I said it in the last episode. I like Starbucks at these prices, guys. They was just temporarily out of my portfolio. I knew I was going to jump right back in because I needed to move that money into Intel. And I'm going to quickly highlight Intel here. They were really up and down this week, but I think I got in at a good average cost for a total return of $5. I think that's pretty good. They recently received a downgrade by some analyst, and the stock was already down 5% when that downgrade came. So they went down another 5%, and then it's just been trending down, and it's really just been trending downward. So for the past month, the stock is down 13%. So, how do you guys look at that? Is that a buying opportunity? Are we going to go lower? Like, these are things you have to ask yourself. I think I bought in right around there. I think when it was around 14%. So again, you look at these dips when stocks go on sale. I take a hard look at it, and if it's a company that I like, that I trust, I'm going to throw some money at it. So I increased my Clorox shares. I really like this company. I really like what they do. I like the bleach products. They do a lot more than just handling the bleach products and the Clorox brand. But I just like this. I like this stock. I really do. I like this stock, And for the portfolio diversity of 11%, I'm sort of up on them for a total return of $4. The stock may be a little bit trending at overvalued levels, but they pay a super dividend that I like. I really like their dividend sitting on 98 cents, and the dividend is getting larger. They are increasing their dividend yield. This is actually, I think, this is a dividend aristocrat. And I do like these dividend kings and dividend aristocrats that are constantly increasing their dividends and increasing cash flow. So in order to throw more money into Clorox, I did have to sacrifice McDonald's a little bit. I took a hard look at McDonald's, and with the move of jumping back into Starbucks, there really was an opportunity for me to move the rest of that money in McDonald's into a Clorox. And both Clorox and McDonald's pay really good dividends, but again, I had Starbucks since I jumped right back into Starbucks. I love these prices. I'm reading on message boards that and in chat forums that a lot of people seem to like this buying point. Some people are waiting for this stock to go as low as $40. I don't see that happening. But again, Starbucks, it's looking quite bearish right now. There's a lot of changes. I think one of their CEOs stepped down or something like that. They're closing down stores. But the biggest thing about Starbucks is investors are worried about its slow pacing growth. This is no longer considered to many as a great growth stock, and I think that's the reason why Starbucks has dipped here for maybe for like the past week. So for the past month, they're down 14%. And my average cost was once $52, but again, I moved that money into Intel. I thought that was a good investment. I thought that was a good trade. And now my average cost, since I jumped back into Starbucks, is now $48.52. So not a bad average cost. I'm looking forward to getting maybe about 15 shares of Starbucks because I love these prices for Starbucks. This is in my mind and in my opinion, this is only temporary. I think Starbucks are, with the management that they have, they're figuring things out. And I think in the next 2 years, we probably won't ever see these prices ever again. So, Starbucks is back in my portfolio, a total return of $2. I think that this is a great average cost. It got as low as $47. Some people are saying this is going to go lower, but I just look at that as a fantastic buying opportunity. I'm just a chance for me to even average down my shares, and this is money that I don't plan on moving, just like unlike the last time I jumped into Starbucks. And the only reason why I moved that money the first time was because I wanted to buy Intel and diversify my portfolio a little bit. I didn't have a lot of technology stocks, and I'm very bullish on technology stocks. So I got Intel and I got Cisco Systems. So I got rid of the store and real estate investment trust, and I lowered my NRZ shares. I think I had like 30 shares. I did a great dividend capture with NRZ. They are trending back up here. The thing about these dividends is that they take the dividend payout out of the stock, so that kind of resulted into this little dip right here. The stock was sitting on about 1802, and then it lost about a 50-cent drop because they paid out that dividend. But the stock is trending right back up here. I had sold the stock off entirely. I'm moving some money around, and the stock it didn't really like take a nosedive or anything. Actually, the stock went back up, but I like the diversification. I like its diversification being an MRIT, so I jumped back in, and now my average cost is $17.53. So I did a dividend capture with NRZ for about $15, and then I did a dividend capture with Store Capital for $7. So right there, guys, we're talking about excuse me, close to $23, $24 of dividends that I'm going to get paid out. And what I do with my dividends is either two things. I either reinvest the dividends into another stock, or actually three things. I reinvest the dividends into another stock, which is an investment acronym called, I think it's DRIP, DRIP, or something like that. I either don't do anything at all, I just let the dividends compound themselves, or the more likely choice that I will do is move the dividends into my checkings account, into my debit checkings account. So that's where that money goes. And sometimes dividends can buy my lunch. Sometimes the dividends pay off my phone. Sometimes dividends pay off my gas. These dividends can do many things, and this is the reason why my whole portfolio is a bunch of dividend kings and aristocrats. And it may look a little boring to other people's portfolios. I know a lot of people are invested into the FANG stocks. They are invested into these Chinese stocks like Alibaba and IQ, and I just think that those are solid growers. But at the end of the day, we are in a bull market run. The market itself is not going to keep going up. At some point, I really do believe a recession will hit. And if history has taught us, it always happens around that 8-year ending mark. I think if you look at the past 8 years, there's always been some sort of crash or dot-com crisis or something like that. In 2000, the market crashed. In 2008, the market crashed. And now we are sitting in 2018, and the market is very well showing signs of a pullback or in volatility. And I wouldn't go as far as say as a market recession is going to hit, because even though I don't look at politics all that much and make those determinations into a stock, I still do my due diligence, and I know that sometimes politics can affect stocks. And even with the economy the way it is, the job reports are up, everything's up, and the market looks good, the economy looks good. It could all come crashing down in an instant. I think in the 2008 crash, I think that very morning, I think it was I don't know what the specific date, but I think that the previous day everything was up, everything was sky high, everybody was laughing, everybody was giving each other high fives, and then that crash hit, and when that crash hit, it hit everyone hard. I think that Dow dropped almost 800 points, and that's far price to pay. We've seen the Dow Jones drop a lot more than that. I think one day this year, the Dow Jones had almost 1,000, I think a 1,300 or 1,000 point drop, which was just totally insane. But guys, this is my portfolio. In a nutshell, the after hours are not looking good, but it's gotten to the point where this portfolio is it's looking more of a buy and hold. Again, this is not my only portfolio. I am with M1 Finance, and I plan on getting other brokerages so I can make some solid investment strategies. Maybe in one of the brokerages, I can probably put it all FANG stocks in there. And all these growth stocks that, even though they don't pay a dividend, they can pay out. They could pan out 50 years down the line. 50 years down the line, Amazon could be $5,000. We don't know. So it is something to consider. It is something to think about. I do like these little growth stocks. That's why I put Visa back into my portfolio. They didn't have a very good. The stock was trending up at a certain point, then it's been trending back down. But I like Visa long term. Guys, it's really, this portfolio really hasn't changed all that much. So I'm gonna go on ahead and cut the video off here. And once again, guys, comment, rate, whatever. But I'll see you guys next time.